Okay, good morning, everyone. Thanks for joining us this Saturday morning. And you're attending the Buying Your Next Home webinar. My name is Ivy and I'm from CPF Board. Now I'm going to take you through some of the things that you need to take note of and how CPF supports you in your home buying journey. Now, first of all, let's see how the property market has been performing all this in the recent times. And I think this is no stranger to any one of you here, probably because it has been flooded in your social media feed that you have seen resale prices has been going up in the past few months. And of course, there were also news that is reporting that the mortgage rates, interest rates is going up in the near future. So I think all in all, the market has been booming and they are performing very well. But I think it's important that you guys have to take note of such a outlook, and important to manage your finances and buy within your means, because some of you or some of the people out there may be actually riding on the trend to get a house, but is it within what they can afford, or is it something that they can actually spend more on? I think this is something that all of us must take note and be aware of. Now, when you are actually going to your buying your house process, I think naturally the question will be, what happens when I sell my flat? Okay, when you sell a flat, the question is also like, whether do I buy first or sell later, or sell first and buy later? So today we have actually prepare some of the information that you can take note of, when it comes to having this thought process. Now, first of all, I'm going to share with you what happens if you're going to buy first and then you sell later. Okay, first thing you have to note is that if you are going to buy first and sell later, okay, you have to actually sell within 6 months from the key collection of your current property. Okay, and if you are also servicing the mortgage loan for the first property, okay, there is a cost of owning two property in the interim, meaning to say you will have probably to pay two mortgage loan in the interim while you're trying to sell off the first property. Okay, and those of you who are actually going to upgrade from HDB to private property, such as buying a condo, there may be a ABSD remission imposed on you. Okay, yeah, so that's something that you need to take note of as well. And last but not least, your ownership of a second property may also affect the amount you can borrow for your new purchase. Okay, because there may be the lower loan quantum that's indicated by MAS, okay, and when it comes to mortgage loan. So all these will come into play when they are assessing your loan eligibility for your second property. Of course, when you are going to sell first and buy later, there is lesser thing to think of. Okay. However, in terms of housing arrangement, you probably have to look for an interim housing arrangement, because some people will have to sell first and then they have to sell and then have to do the handover within 3 months, for example, and then to look for your desired unit, you may not be able to locate that so fast. So these are certain things that you may have to take into consideration when you are buying your next property. How do you actually take care of your housing arrangement in the event that you're unable to extend, okay, to stay in your existing house? And in terms of the proceed, okay, you can use your proceed from your previous home to finance the next home. That one is quite straightforward as well. Okay, so there is no right or wrong way, but rather which is the most suitable solution that best fit your need at the moment. Okay, because I know that some people, they will probably they're able to get their desired unit quite quickly. Okay, buying a house is just like going out to the market and see what best suits your needs and best suits your arrangement, right? So I think it is always important to have a chat with your partner and your family and see which other circumstances suit best in your scenario. Now, moving on, what happens after you sell your house and there is the sale proceed, right? The sale proceed will actually go into paying back some of these things. For example, your outstanding housing loan. Okay, you need to refund back to your own CPF account, the CPF refund, and other sales expenses, for example, like the legal fees. Now, in terms of CPF refund, how much CPF do you need to refund, right? Okay, so this is something that you need to take note of. Okay, for those of you, I think most of us here who use our CPF always savings for our, to finance our house, monthly installment or even down payment. Okay, the money that you need to refund upon the sales of a flat, okay, is the principal amount plus the accrued interest. Now, what do we mean by the principal amount? Now, principal amount means the amount that you have withdrawn for the purchase. Accrued interest means otherwise earned on your CPF account, meaning to say how much interest would I have earned if I did not withdraw this amount for my housing needs. Okay. Now, there's actually a way to check how much you need to refund, okay, for your next property. Okay, you can actually log on to My CPF online services. Go under the home ownership dashboard. Okay, that's where you can see how much principal amount and the accrued interest that you have incurred to date. Okay, that amount, that data will actually help you in better prepare and in your budget finance, in better helping you to do your budgeting, when you want to buy for your next home. Now, for those of you who are 55 and above, and you probably have pledged your property to make up your retirement sum, okay, you will also need to return the pledged amount. Okay, so this is something you have to take note of for those who are above 55 and have previously used your existing property to pledge to make up for your retirement sum. Now, after you have settled your CPF refund, the next question is how much CPF can I use from the property sales proceed? Okay, now for those of members who are below 55, it's pretty straightforward. Once you have returned the P plus I, the principal plus accrued interest back to your ordinary account, okay, you can use the ordinary account savings for your next property purchase. Okay, for those members who are above 55, this is something that you need to take note. Okay, the refund will be used to top up your retirement account first up to your full retirement sum. Okay, and then any balance housing refund will be paid to you in cash, okay, unless you request it to be in your ordinary account. Okay, subsequently, you can use your ordinary account savings for your next property purchase. All right, so what do I mean by that? Okay, I have an illustration here to help you better understand for those members who are above 55. Okay, now assuming Mr. Tan is 55 this year and he decides to sell his HDB flat, okay, the principal amount plus accrued interest that he has withdrawn for his housing purchase is 200,000. Okay, he has an outstanding of housing loan of 250,000. Okay, his FRS this year is 192,000. So his retirement account balance before the sales of flat was 40,000. Okay, now for members above 55, they only need to refund up to their full retirement sum. And in this case, Mr. Tan's full retirement sum is 192,000. So he have to top up 152,000 back to his retirement account to make up the full retirement sum of 192,000. Now, his selling price was 500,000. He less off the outstanding housing loan of 250,000 and less of the P plus I amount refunded to his retirement account up to the FRS, which in this case is 152,000. Now, the cash proceed that he will receive from the sale of his flat, okay, which is 98,000. And this 98,000 is available for him for his next home purchase. Now, some of you may ask, what happens if I have a negative sale? Okay, meaning to say, there's a shortfall in the P plus I that have to be returned back to my CPF account. Okay. Now, assuming you sell your flat at 400,000, okay, your outstanding loan is 100,000, and you need to return your CPF 350,000. Okay, so but you actually have a shortfall of 50,000. Okay, so seller, you do not need to top up the shortfall in cash, provided the property is sold above or at a market value. Now, the next question after you have sold your flat is how much should I spend on my next home purchase? Okay, so I have here with me some guidelines to help you to better plan your finances for your next home purchase. Okay. Most importantly, we need to buy within our means. Okay. So the immediate constraint that you may have is there are two ratio that you need to take note of. Okay. Your mortgage servicing ratio should be kept within 30 or less than of your gross monthly income. Okay, your total debt servicing ratio, okay, should be kept within 50%, 55% or less of your gross monthly income. Now, the total debt servicing ratio is something, is an important indicator that you need to take note of. Okay, reason is because the total debt servicing ratio also take into account the existing loan that you have. For example, your credit card loan, your car loan, okay, and how's your credit card, if you have any credit card installment. Now, because if you have a lot of installment and you do not pay in time, okay, this will affect the amount of loan that you can take from the financial institute, okay, because they will look into the different debt that you have, okay, to determine how much they can loan you for your housing mortgage. Okay, for the long-term consideration, okay, if you spend more on your house, means you have lesser for your retirement. Okay, and furthermore, your property prices may not continue to appreciate as much as they used to be. Okay, hence, you may not be able to rely as much on the housing equity to supplement your retirement in the future. Okay, so I think this is something that you need to take note. Eventually, your OA savings will form part of your retirement savings when you turn 55. So this is why we always encourage members to buy within their means. Okay, how do you actually use your OA wisely? Okay, and what are the uses of your OA? Okay, some of you may be quite familiar. Okay, but I just want for a quick recap. Your OA can be used to pay for your stamp duty or legal fees. Okay, you can use it for the down payment for your property purchase. Okay, for those who are getting HDB flat, you can actually use your OA to pay for the home protection scheme premium. Okay, and you can use your OA to finance your monthly housing installment. Okay, and those who are getting a private property, those landed, okay, you can use your OA for construction of a house or the purchase of a land. Now, it is important to use your OA wisely because that the allocation rate will change as you age. Now, I'm not sure if anybody actually take note of this, but it is an important information that you should share with your friends and your family, and also for you to take note. Okay, so more savings are actually allocated to members' special account and MediSave account as they age. Okay, if you notice from the table here, okay, the change will gradually reduce, okay, when with the change of the age band, and you can notice that, okay, more of this percentage, okay, will be allocated to the special account and the MediSave account. Okay, this is because as we age, we want to help members to better prepare them for their retirement and their healthcare needs. Okay, this is also important that why we have a CPF housing limit, because we do not want member to overspend. Okay, so how do you know your CPF housing limit? Okay, your housing limit depends on 3 factors. Number 1, the type of property. Number 2, the type of housing loan that you are taking. Last but not least, okay, this is important, whether or not your property remaining lease can cover the youngest buyer using CPF savings to at least age 95. Okay. Now, for those of you who are using your CPF to buy a new flat, a BTO, okay, the housing limit, actually there's no limit to it. Like you can use all your CPF OA savings to pay for your house. Okay, but those who are actually getting a resale flat, okay, or private property, okay, you have to take note what is the limit that's applicable to you. Now, following slides, I have 2 examples. Okay, Claire and Chandra decided to get a HDB resale flat, right? And they are taking up a HDB loan. Okay, so what happened is the applicable housing limit to them is actually 500,000. Now, how do we determine this 500,000? Okay, we will look at the two prices that is actually given to us. Okay, the lower of the purchase price or the valuation price is the applicable housing limit. Now, purchase price meaning, okay, the agreed transaction amount between the buyer and the seller. So in this case, okay, it's 520,000. Now, after which, HDB will come and evaluate the house, okay, and they will give you a valuation price. And in this case, the valuation price is 500,000. Now, between these two, which is the lower, and that will determine the applicable housing limit for this case. Okay, and for Chandra and Claire, the applicable housing limit is 500,000. Okay. Now, what happened if they already exhaust their OA savings, okay, up to $500,000, okay, and they have outstanding loan? Because it could be more than that, considering the interest that is actually incurred with this housing loan, right? Okay, so if they have any outstanding housing loan and they want to continue their OA savings to pay for their housing loan, what happens is that they have to make sure they are able to set aside the basic retirement sum, okay, individually in their special account. Okay, so because Claire and Chandra, they are below 55, okay, they look at the basic retirement sum of the year. And in this case, this year, the basic retirement sum is 96,000. Okay, and they are able to set aside individually the BRS, okay, meaning to say they are able to use the remaining ordinary account savings to pay for their remaining housing loan. Now, with the same scenario, but this time round, Claire and Chandra want to use a bank loan. Okay, and so how much they can use from their CPF OA savings to pay for their house? Okay, so with the same applicable housing limit, which is 500,000, okay, and they are able to set aside the basic retirement sum of 96,000, okay, the limit that they can use, okay, is only an additional 20% of the 500,000, and in this case, it's 100,000 additional. Okay, if they are able to set aside the BRS, okay, we will look at the total amount, which is 600,000. Okay, that is the max that they can use from their ordinary account savings to finance their housing loan. Anything beyond 600,000, they have to pay in cash. Now, this is exceptionally important because, as you know, that like I shared earlier, our allocation rate actually decreases for the ordinary account savings as we age, right? Meaning to say, okay, less money is going into your ordinary account savings. So you have to be aware and take note of such cases so that you will not run into a possibility of having to fork out in cash for your outstanding housing loan. Okay, and this is especially important for people who are going to retire, okay, and they are getting a house. So this is and this is how you can actually check the amount that you can use. Okay, in your CPF online services, okay, under home ownership dashboard, you can see the remaining amount you can use towards your housing limit. Okay, by checking all these figures, okay, it helps you to better plan for your finances and your property purchase. Now, between HDB and bank loan, which is a more suitable loan, okay, at the end of the day, I think there is no right or wrong, and whichever that is better. I think it is how you assess both loan package to you and that best suits your needs, okay? Now, for HDB loan, the maximum loan amount, okay, is up to 85% of the price or the flat value, whichever that is lower. Okay, the payment mode for HDB loan, okay, is that you can use CPF, cash, or even a combination of both. And the interest rate is actually pegged at 0.1% above CPF OA interest rate, which is 2.6. Okay, so CPF OA interest is 2.5, right? So HDB housing loan is actually 2.6. And this has been quite stable for the past many years. Okay, and for bank loan, okay, the maximum loan amount is up to 75% of the price or a property value, whichever that is lower. Okay, the down payment, at least 5% must be in cash. Okay, the interest rates actually it varies across banks. Now, so using back the same example, Claire and Chandra decided to get a resale HDB flat. Okay, the property price for them is 520,000. The valuation price 500,000. Now, if we compare HDB loan versus bank loan, let's see the maximum loan amount and the minimum down payment they have to pay based on this scenario. Okay, for HDB loan, okay, the maximum loan amount is 425,000. For bank loan is 375,000. okay, if they're able to meet the requirements and they hit the maximum loan amount. Now, the minimum down payment that they have to pay, okay, it's for HDB loan, it's 75,000. Okay, for bank loan, okay, it's 25,000 in cash and 100,000 either cash, CPF, or a combination of both. Okay, so for those of you who are taking a bank loan, please take note that you have to fork out in cash, okay, for the 5%. Okay, so these have to work into your budget planning for your property purchase. Okay, it is also important for all of you to consider the interest payment on your dream home. Okay, many times people might take the purchase price as a full amount, okay, depending on the type of loan and the duration of loan that you take. Okay, the total cost can be much higher. Okay, so do take note of this, okay, when you are planning for your home for your home purchase. Okay, for those of you who are intending to use your CPF for multiple properties, okay, this is something that you have to take note. Okay, buyer has at least one property that can last him to age 95. Okay, you can set aside the basic retirement sum in your OA or SA or RA, depending on your age, before using the excess ordinary account savings towards the second or subsequent property. Now, if the buyer do not have a property that can last him to age 95, then he have to set aside the full retirement sum instead. Okay. I think in my earlier slide, I share about the long-term consideration, meaning to say, how do you actually balance the need in your housing and your retirement? Okay, this is very important. Okay, so one of the ways is you have to make prudent financial choices. Okay, using your ordinary account savings for mortgage means that you're actually also losing out the interest that you could have earned if you have not used the money from your OA savings for your home purchase. Okay, you can also consider using some cash instead. Okay, or you can actually leave some savings in your ordinary account to act as a safety net, okay, buffering the payment of your monthly mortgage installment in case of temporary unemployment. I think one thing we have learned from this pandemic is that many times we notice how people actually suddenly lose their job, okay, and which means that when they lose their job, they probably do not have the regular contribution, okay, to their CPF account. So by leaving some savings in the OA can also help you to tie you through the difficult time, okay, before you actually manage to get another job. Okay, so you can actually choose to set aside up to 20,000 in your ordinary account when taking HDB loan. Okay, also try to minimize the use of your savings on mortgage interest. Okay, you probably can choose a lower interest of a mortgage loan, make capital repayment when possible. Okay, so you also have to keep your housing budget in check. Now, earlier I mentioned about the mortgage servicing ratio being 30%, but actually, to be more prudent, you should keep it within 25%, okay, to use less cash or CPF savings. Okay, your total debt servicing ratio should be also kept within 55% of your gross monthly income. Okay, another way to keep track of your own to be more effective in your budget planning, okay, you can actually use our CPF housing usage calculator, okay, to calculate the amount of CPF you need to use towards your next property purchase. Okay, most of us here, or generally most of the people that I know, they usually use full CPF to pay for their house. But what if today you are able to use part cash, part CPF? This is actually possible. Okay, I would like to share with you this scenario. Okay, that another approach that you can take, and why is it like this approach will be better? Okay. Now, assuming the housing loan and the tenure for this housing loan is 25 years, okay, we take 2.5 as the interest rate and the monthly installment is 1,436. Okay, now if you use part cash, part CPF, meaning to say 75% from CPF, 25% from cash, okay, actually, in fact, any percentage is okay. Just for the purpose of illustration, we just use 75%, 25%. Okay, so meaning to say $1,070 is actually from ordinary account savings and 366 is from cash that is serviced towards this housing monthly installment. Okay, Now, assuming this $366 you did not take out from your ordinary account, okay, it's kept in your ordinary account, you're earning a 2.5 interest, and over 25 years, you can earn about 42,000. Okay. Now, if you have already fulfilled or you already settled your housing needs, okay, or whichever that you have accessed in your ordinary account, you can actually consider transferring this $366 from your ordinary account to your special account. Okay, now why is that so? Because ordinary account earns 2.5, special account earns 4%, right? So that's give you a higher interest. And if you already have settled and managed the other needs that you have, okay, you can do this transfer, okay, and over 25 years, you can actually earn a $78,000. As compared to someone who fully use CPF savings, okay, and this $366 is actually kept in the bank, okay, with the interest of 2%, okay, for over 25 years in a fixed deposit, you earn about 15,000. Okay, so by having this approach can actually help you to earn more in your ordinary account savings, in your CPF account, basically. All right. Alternatively, okay, another way that you can boost your CPF savings is you can do CPF top-ups, okay, or do a CPF transfer from OA to SA or RA, depending on your age. Now, do bear in mind that if you want to do a cash top-up, you can do to your special account if you're below 55, or you can do to your retirement account that are above 55, okay, or you can do a VC3A, okay, voluntary to your CPF account. Okay, or you can do a CPF transfer like I shared earlier, but CPF transfer from OA to SA, please bear in mind that this is actually a one-way transfer, is irreversible. So please only transfer, okay, the excess amount that you do not require for any other purposes. Okay, now another way that I want to share with you is actually making a voluntary housing refund. Okay, the earlier you refund your CPF savings, the less you will need to refund upon the sale or transfer of your property. Okay, by doing so, you can also earn an attractive risk-free interest of 2.5%. Okay, and you can actually retire with more CPF savings, because when you actually refund earlier, okay, this money is in your CPF account, it starts to earn interest, okay, and have a longer runway to help you to work harder for your account. Okay, and of course, when you sell your property, you have lower CPF refunds that you need to go back to your CPF ordinary account. Okay. And actually, more people are actually doing this voluntary housing refund, okay, to increase the inflow of their CPF savings. Okay, during the pandemic, in 2020, we noticed the top-up and voluntary housing refund, okay, were actually close to 3 billion, and the housing refund was approximately 1.5 billion. Okay, this actually give us a good indication that the members continue to trust the system and leverage on the good interest given. Okay, and one other ways that you can use your property for your retirement is unlocking the value of your property. Now, how can you do it? There are a few ways. Okay, one of it is you can rent out your flat or your spare room to earn a regular rental income. Now, but please bear in mind, okay, do not go to with the illegal way by subletting your flat, for example, on Airbnb. Okay, I think you have seen the recent news. Okay, so you just have to rent out, okay, with the proper legal way, rent out your flat or spare room, okay, so that you can get a regular income through the rental of your flat. Okay, another way for those who are 55 and above, okay, you can right size to a smaller flat, meaning to say you can buy from a 4-room to a 3-room, okay, to get a cash bonus when you top up to your retirement account. Okay, age 65 and above, okay, what you can do is you can sell the tail end of your flat lease to HDB and receive a bonus. Okay, so likewise, we're also seeing upward trends of people taking up the lease buyback scheme and silver housing bonus since 2018. And part of this new net sales proceed actually used to top up members' CPF life, okay, boosting their monthly payout by an average of $500 no matter how long they live. Okay, I've come to the end of my sharing, but I would like to leave you with a note that is that your CPF savings eventually form your retirement income. So every dollar you spend on your housing could be $1 less for your retirement needs. So I hope that whatever I shared today is useful in helping you to determine and your financial planning for your next property purchase. Thank you very much.
from OCBC, Association of Banks in Singapore, to share more about bank loans.
Okay, very good morning to everyone. My name is Edmund from OCBC representing ABS. Okay, so my topic will actually be buying your next property. Okay, so let me just flash the next screen for today's agenda. Okay, so today's agenda, we are looking at the cost to look out for when you're buying a home. Okay, the step-by-step guide to financing your property, and of course, understanding mortgage terms and clauses. Okay, so any questions you may have, you can just post in the Q&A chat. Okay, we will have them answered accordingly. Okay, the cost to look out for when you are actually buying a home. Okay, so one of it, of course, would have been the stamp duty, buyer stamp duty. Okay, do look out, there are two types of stamp duty. So one would be buyer stamp duty, which would be applicable for all residential properties and commercial property, of course. Okay, and another set would actually be the additional buyer stamp duty, which I'll be covering later. Okay, in my slides, I'll also be showing you some examples, okay, to help you to actually work out the formulas, okay, to work out what is the buyer stamp duty involved for your purchase. Okay, so for the buyer stamp duty, right, it's actually tiered. Okay, so how it works is that it will be based on the first 180,000, okay, to be charged at 1%, okay, and subsequently the next 180,000 at 2%, okay, the next 640,000 at 3%, and the remaining amount at 4%. Okay, but there is a formula to actually there's a shortcut to this formula instead of going through the long form, right? Okay, so what happens is that, okay, you can actually take for property purchases under 1 million, okay, you can just take a 3% of the purchase price, okay, or valuation, whichever is higher, okay, minus 5,004. So this 5,004 that is shown over here is for the formula to work so that you do not have to go through the several calculations to obtain the buyer stamp duty. Okay, but there is a difference if your purchase price or valuation is above 1 million. Okay, then the applied formula will be 4% times your purchase price. Okay, less of 15,004 instead of 5,004. Okay. Okay, for additional buyer stamp duties are for home buyers who are looking to buy more than one property. Okay, when we are determining the property count, okay, we will also depend on whether you will be selling off your existing property. Okay, so as long as you have sold off your existing property, it will still be considered your first property purchase. Okay, so this is something that I want to share because there are queries from our customers that they mentioned that, oh, this is my third property purchase in my life. Okay, but it doesn't work that way. We only look at what is the current property count. Okay, for Singapore citizens, right? Okay, there is no additional buyer stamp duty, okay, on their first property purchase. Okay, however, if they are not looking to sell their existing property and looking to buy their second property or third property purchase, additional buyer stamp duty will apply accordingly. So for a second property purchase for Singapore citizens, it will be charged at 17%. Okay, and third property would be at 25%. Okay, however, for Singapore PRs, foreigners, and corporate entities, right? Okay, even if this is their first property purchase, right? Okay, on top of the normal buyer stamp duty, additional buyer stamp duty does apply. Okay, so I have also shown you a slide over here to show you, okay, basing on a 1 million property, how much does it cost for the respective Singapore citizens, Singapore PR, and foreigners, right? If they're buying a first, second, or third property, how much would the additional buyer stamp duty cost? Okay, so not to be confused, right? This includes all the stamp fees involved. So for Singapore citizens, it's only one set of stamp duty for first property purchase. Okay, that's actually the buyer stamp duty. Right, so we will have another work example, okay, to show you how does the formula applies to the respective purchase price. Okay, so to backtrack a bit, just like I mentioned, okay, so anything property that is above 1 million, okay, the 4% rule applies. Below 1 million, it would be based on 3%. And for the formula to work, right, the lessing off, okay, for 1 million and above will be on 15,400. Okay, whereby if the property purchase price is less than 1 million, then the deduction would actually be 5,004 for the formula to work. Okay, so on the assumption that if the customer actually buys a property above 1 million, right, the stamp duty that is payable via stamp duty will be at 32,600. Okay, and the additional buyer stamp duty for the second property purchase, a Singaporean buying a second property purchase, okay, it will be 236,600. So this is something that you need to consider before you actually make a commitment to buy a second property. So these are one of the costs involved, okay, that you need to take note of. Okay, and additionally, this is something for your consideration as well. Okay, there is such a thing as seller stamp duty. Okay, seller stamp duty applies for all property purchases on or after 11 March 2017. Okay, so what happens is if you were to sell your property, right, within 3 years, right, from the purchase date, okay, there will be seller stamp duty chargeable on the selling price of your property. Okay, so let's say if you were to sell your property within the first year from your purchase date, okay, the seller stamp duty is charged at 12%, and so on and so forth. If you were to sell a property after the third year of purchase, okay, it will be charged at 4% of the selling price. Okay, in order to avoid this altogether, right, the minimum holding period for a property, okay, would have been not lesser than 36 months. So once you cross the 36 months mark, 3 years, okay, there will not be any seller stamp duty chargeable. Okay, so that's another point of consideration. Okay, and of course, there are other miscellaneous costs, such as legal fees. Okay, so based on industry standards, right? Okay, for property purchase, if you are buying a HDB flat, okay, and you are taking a bank loan, okay, to cover the mortgage, okay, the estimated legal fees are from 2,000 onwards. Okay, and for private property, right, the guide price is from 2,500 onwards. Okay, however, not to worry, for legal fees, right, CPF actually does allow you to actually withdraw from your CPF OA savings, right, to actually pay for the legal fees. Okay. Okay, one other thing to take note is that if you are taking financing from a bank, okay, the bank will actually require you to pay for this set of valuation fees for the bank to evaluate your property. Okay, why is that so? Because we do need to actually do a valuation on your property, because if the purchase price, right, is higher than what the valuers determine, okay, that will actually create something called a cash over valuation. Okay, so the bank side, we will always base on the lower of both between our valuation and the purchase price to actually determine what is the financing we'll be giving to the home purchase. Okay, on the assumption, let's say if the property valuation is at 1 million, okay, and the purchase price that you're buying is at 1.25 million. Okay, currently the maximum lending we are actually doing to customers is at 75%. Okay, and we will be adopting to take the lower of both. Okay, so we will base on the valuation of 1 million to finance up to 75% instead of taking the selling price, which is at 1.25 million. So do take note. Okay, and valuation fees for BUC, which is our building under construction, okay, estimated is about $50. Okay, and for a completed property, right, generally in the mass market is probably about $300 and above. Okay, of course, the higher the purchase price, right, okay, that also impacts your valuation. Okay, especially for landed homeowners or potential landed home buyers, right? Okay, valuation price could be in the region of maybe about $500 to $1,000 and above. Okay, there are other fees that you need to take note of as well. Okay, there are sales fees involved. Okay, if you are appointing an agent, okay, so for HDB wise, right, these are just more or less the market norms. Okay, the cost of the agent fees would actually be about 1%. Okay, if you are a buyer, and if you are a seller of HDB home, right, it's approximately about 2%. Okay, and for private property, the sales commission is about 2% on the seller's part, but there is no commission charge, right, on the buying of a private property. Okay, so the sales commission is only charged from the owners, the sellers of the property. Okay, another thing to take note of, these are all the other soft costs. Okay, property tax, whether it's on an owner-occupied basis or investment basis, right? Okay, there will be tax involved, and this tax rate is actually based on the net annual value of the property. Okay, this net annual value, right, you can actually find them online at IRA's website. Okay, and just to share a little bit more, in Singapore, right, at any point of time, you are only able to declare in an owner-occupied property if you're staying in one, okay, not for two. Okay, so let's say if you do happen to have a weekend home, right? Okay, you can only declare owner-occupied tax on one of them. Okay, and then of course, maintenance fee is another set of fees that you need to take note of. Okay, for HDB, there will be monthly service and conservancy charge. Okay, and private condos, that will be on a maintenance fee, usually paid on a quarterly basis. And of course, for landed homes, right, owners should actually set aside on their own accord for maintenance, ad hoc maintenance as required. Okay, so far so good. Okay, so I'll go to the next topic. That will be a step-by-step guide. Okay, to share with you, right, the major milestones when you're actually buying a resale private property, and how does the bank comes in to finance the purchase of your resale private property. Okay, so when you actually are ready to actually proceed with something that you have want to purchase, right? Okay, the first thing first is that in order to have this exchange of this option to purchase, okay, usually in the market, right, okay, you have to set aside about 1% of the agreed purchase price in cash. Okay, so that will usually be given straight to the seller of the home. Okay, so in return, right, for your 1% option fee, okay, you receive this document called option to purchase. Okay, so when you actually pay this 1%, right, it also means to say that the seller will not be able to resell this option to anyone during this option period. Okay, so usually the agreed timeline will be about 14 days for the home buyer to confirm whether they are proceeding with the purchase. Okay, so the sellers in this 14 days period, okay, this what we call the option exercise period, they are not allowed to sell this property to anyone else. Okay, however, in this period, right, if the potential buyer decided not to proceed with the purchase, okay, then this 1% option fee will be forfeited. And the sellers have the rights to keep this and then is able to resell this in the open market. Okay, however, if the home buyer decides to actually proceed to confirm for this purchase, right? Okay, usually the market norm, they will have to pay an additional exercise option fee. Okay, usually it's about 4%. Of course, for private treaty, this can be negotiated, but I think most of the time, the market norm, the minimum will actually be 4% to exercise the option. Okay, so once they have decided to exercise the option, right? Okay, they should also start to apply for the housing loan. Okay, so what are the documents you need to prepare to bring to your financer to apply for a housing loan? You will need the option to purchase, okay, and a copy of your photo ID, the relevant income documents as determined by the bank, okay, and HB Info Web printout to show any financial information if you have taken a loan previously from HDB. Okay, so it's very important that during your housing loan application period, you need to have your SingPass ready. Okay, because a lot of documents and items the banks will actually require you to actually go into SingPass to actually download them or procure them, or even log in through My Info to submit your relevant information to the banks. Okay, during this period when you're applying for the home loan, sorry, okay, the bankers will actually discuss with you your financing needs to determine what is the loan amount that you should be applying for. Okay, and in terms of loan tenor, are you going to apply for a maximum loan tenor or a loan tenor that will be customized to your needs? Okay, at this stage, you also discuss your cash, the CPF that you will be using for your down payment on the purchase. And also, we'll be going through with you on the home loan packages that we have several packages within the bank. So later on, I'll also touch a little bit on the overview of the housing loan interest rate and what are the various types of packages that the banks are offering in the market. Okay, and if there is a bank, if you're adopting to take a bank as your financer, right? Okay, you actually need to appoint a lawyer. Okay, the lawyer will actually help to liaise with the bank and CPF board, right, on behalf of you. Okay, and you also receive a residential property loans fact sheet. Okay, so this fact sheet will give you all the relevant information pertaining to your housing loan that you're going to apply for. Okay, they will also tell you the minimum cash down payment required. Okay, what are the high and lows of the package that you have selected? Okay, and eventually, if the interest rate were to go up and increases, right, what will be the impact on your housing loan installment? Okay, so this fact sheet is rather important. It will be like an summarized overview of all the essential information that you need to look out for when you are deciding to apply for a housing loan. Okay, then just now when we mentioned that once you exercise the option, right? Okay, 14 days from the day you exercise the option, right? Okay, you will be required to pay for your stamp duties. Okay, whether it's your buyer stamp duties or additional buyer stamp duties, okay, that will be 14 days from the day you actually exercise the option. Okay, and then the next step would have been once everything, all the terms and conditions have been negotiated, okay, and you're comfortable with your loan, right? Okay, then you actually need to accept your loan offer. And thereafter, the customer will be given a copy of the letter of offer, okay, with the mortgage details, along with the property fact sheet, okay, declaration on income and debts, and all other regulatory declarations. Okay, then thereafter, what will happen is that once you have your letter of offer accepted, okay, you will hand over these documents to your law firm. Okay, so from there on, then the lawyer will start liaising with CPF board for you to actually sign off the mortgage documents to actually collateralize your property with the bank. Okay. So during the exercising of your option to purchase, okay, you will be required to bring the original option to purchase document, okay, for the lawyers to actually help you to exercise the option and return a copy to the seller law firm representing the seller. Okay, definitely you need to bring your original IDs, okay, for the lawyers to witness. And of course, if you're using CPF funds for your, such as down payment, stamp duty, legal fees, or even application for monthly installment deductions, okay, you will be required to bring your CPF account balance statement, okay, marriage certificate or birth certificate, because you need to actually qualify to use CPF. So these are the relevant supporting documents that you need to bring for the appointment, okay, so that the law firm can actually write into CPF to actually apply for the usage of CPF on the property. Okay, however, do take note, right? Okay, even you have surplus CPF, right? When you're actually taking a bank financing, okay, not everything can be paid for via CPF. There is a minimum cash component that is required, okay, which is early on that I mentioned. Okay, when you're making an option to purchase, that's actually 1% of the entire purchase price. And subsequently, when you exercise the option, okay, the next 4% of the purchase price to exercise your option, right? So minimum 5% down payment has to be in cash. Okay, there will be other specific scenario whereby the cash component can be more than 5%. Okay, but I'm using a very generic illustrations to show off us here is that for the minimum cash down payment is 5%. Okay, later on, I will also show you a table, how does it increase to 10 or 25% for the specific scenarios. Okay, so as I mentioned earlier, will be stamp duties payable within 14 days of signing the OTP or option to purchase document. Okay, stamp duty, if you're looking to actually seek reimbursement, right? Okay, you will still need to actually pay the stamp duties in cash first. Okay, before submitting a request to request reimbursement from your CPF account, if your CPF account has sufficient balances. Okay. So after paying the 1 plus 4%, right, the next milestone would have been the law firms will actually do the mandatory legal checks and regulatory checks on your behalf. Okay, before you actually make payments on the balance of amount. Okay, because for bank financing, right, at this moment, the maximum loan to value we will accord to customers is actually 75%. Okay, so while pending legal completion, the law firm will actually help you to exercise the option to purchase, okay, and also apply for CPF withdrawal if you're using CPF, okay, doing any caveat lodging on behalf of the bank and CPF. They will also do title searches to ensure that there are no irregularities found, and the issuer of the seller option to purchase, right, is indeed the seller. Yeah, but because there could be an instance because this option to purchase, right, handwritten, so the names may be incorrect or there could be some typo, right? So this is the part whereby when they do the title searches, right, they will tally against the actual legal documents. Okay, and they also do bankruptcy searches on the sellers, right, to ensure that your rights are protected. Okay, so if let's say the seller is actually a bankruptcy, right, so the proper approval has been obtained to actually sell off the property. Okay, so these checks are all in place, right, prior to you even making the remaining down payment. Okay, so at this point of time, no action is required from the potential buyer. So the law firm and the bank will actually do the relevant checks while pending completion. Okay, so what happens is that the next milestone will be about 3 to 7 days before the actual sales completion, which is also commonly known as the key collection date. That is where you actually gain access to the unit and you become the legal owner. Okay, so prior to that 3 to 7 days, you will actually have to sign the mortgage document by then, okay, to collateralize your property with the bank before we will actually disperse the loan to complete your purchase. Okay, so any other portions, whether in cash or CPF for the remaining down payment, okay, will be affected during this period as well. And any legal fees that has to be paid, right, would actually be required to be paid 3 to 7 days before the actual sales completion. Okay, and the stamping on mortgage documents usually charged at 0.4%, okay, or capped at $500, right, has to be paid as well to legalize the mortgage document. Okay, and that's it. So the final step will actually be on the actual day of completion, right, where you collect your keys and move into your property. That's where we actually release the funds to the seller as well. Okay, so far so good. Okay, so the next step after the sales has been completed, right, then we have to speak on repayment of your housing loan. Okay, in the industry, most of the time, right, installments are either paid on the first day of the month, okay, or on the 15th of the month. Okay, for monthly installment on mortgage, right, okay, it can be paid via CPF or cash. Okay, and the one of the common questions posed is that if I buy a private property, am I able to use my CPF? Okay, the answer is yes. Okay, you can actually use CPF even if you are buying a private property. Okay, and there's another common question posted also, is that if I'm no longer working, I still have CPF balances in my account. Okay, am I allowed to use my CPF OA balances for my monthly installment repayment? Okay, the answer is yes as well. So as long as the member has sufficient CPF in the OA account, okay, meet CPF requirement, right, they will be able to service their housing loan, whether it's a HDB or private, via CPF. Okay, so if it's you're making payments for your mortgage, right, via cash, right, just ensure that the funds are in, okay, 1 business day before the deduction date, either on the 1st or the 15th. So this you have to check with your financer. Okay, also do take note that if there's any public holiday or if the 1st or 15th of every month happens on a weekend or public holiday, right, do ensure that you make plans to actually credit them before the actual day. Okay, and for CPF wise, right, if there's any change in your last instructions, right, you are advised to actually log in promptly, okay, before the deduction date, probably about 14 days before, to give your instruction to CPF, right, to tell them of your revised installment amount if there's any changes. Okay, so rightfully it should happen by the 18th of the month so that the installment can take place in time for your deduction on the 1st. Okay, so for your relevant loan information, right, you can also log into your internet banking, okay, or via statements, okay, to instruct CPF on the new installment amount if there's any changes. Okay. Okay, so for a simple overview on the mortgage terms that is relevant to you, okay, there are actually 3 types of financing for residential property loans that we are giving out to our customers. So of course, the first one will actually be the private housing loan. And yes, we do finance a HDB loan as well. Okay, and additionally, we do term loans, right? Okay, on private property. Okay, so just to share a little bit more, what is the term loan about, right? Okay, because for equity, right, time to time, this property value may increase. So maybe if you have bought a property about 10 years ago, you may have bought it at 1 million. But today, let's say in today's context, current market condition, your property value has risen to about 2 million. Okay, you are able to ask the bank to reassess your property based on the current market value, as long as the loan to value permits, right? Okay, at a value determined by the bank, okay, you are able to cash out on the difference. Because there is an increase in the valuation of your collateral, you are allowed to actually cash out, taking a term loan of your property. Okay, so this term loan is actually commonly known as top-up, equity term loan, mortgage withdrawal loan. They all mean the same. So it's actually just to gear up on your existing property. Okay, so this is a simple table, right? Just to show you the different limits, right? We have. Okay, so how to read this table, right? Okay, first thing first is we will read from the top portion all the way downwards. So the first thing is to determine whether you're looking to buy a HDB flat or a non-HDB flat, which is a private property. Okay, then you go down, the second bar will be determining, right? Okay, currently, do you have any outstanding loan or you have one other housing loan or two? Okay, but the thing is, as I mentioned earlier, okay, as long as you are going to sell a property and you're able to prove it that you have already sold your property, right, you will be considered as under no outstanding housing loan. Okay, so if you move down, the tenure is also different between a HDB flat and a non-HDB flat. Okay, so it's either for HDB flat, right, it's either 25 or up to 30 years. Okay, there is a difference over here because just now I mentioned there were different permutations in regards to the cash down payment, right? Okay, in banking terms, there is such a thing called extension of loan tenure. Okay, we all know that the common retirement age recognized is actually 65 years old. Okay, so if you are going to go beyond 65 years old, okay, capped at 75, okay, you are allowed to, but there is a trade-off. Okay, so if you are looking to go extend beyond your retirement age, right, up to 30 years for HDB flat, okay, your level of financing will actually drop to 55%. So let's look at the loan to value. Let's look at the HDB first. Okay, so if you are going for non-extended loan tenure, okay, that means you're at the end of the loan maturity, okay, you will be at 65. You can actually go for the maximum loan to value, which is 75%. Okay, however, there are customers that they do not wish to pay so much for a mortgage. So what they do is that they requested for a loan tenure extension. So instead of 65, right, they will end off their mortgage up to 75 years old, okay, but capped at 30 years loan tenure. Okay, so having said that, if they were to request for the extended model, right, the loan to value will actually dip to 55%, okay, and they will be required to pay more cash down payment. Okay, so for the normal customer will actually be 5% cash down payment. Okay, if you're going for the extended loan tenure model, okay, then it will be a minimally 10% cash down payment. Okay, these limits will differ between a HDB and private. So for private, the key difference is that on the loan tenure, the maximum loan tenure for HDB on the extended model is 30 years. However, for private housing loan, right, you can actually go all the way up to 35 years. Okay, and probably one more thing I would like to highlight to you is that if you are buying a private property and you have no intention to sell your existing property, okay, and it still has a housing loan, right? Okay, the cash down payment and loan to value will be affected as well. Okay, so if you do not want to sell your property and your current property still has a housing loan, right, the maximum loan to value will be actually up to 45% or 25% if you're seeking for extended tenure. And the cash down payment for your second property will be differ. Okay, it will not be on 5% basis. It will be on 25% down payment, cash down payment. Okay. Next, there is another thing you need to take note, right? Okay, for applying a housing loan, right, we will apply this concept. It's called total debt servicing ratio, TDSR for short. Okay, so this is actually to determine what is your maximum loan eligibility. Okay, so how do we determine this, right? Okay, this table is to show you the breakdown. How do we compute your total debt servicing ratio? So what we do over here is that we will actually measure what is the monthly installment on the new mortgage that you're intending to take up. Okay, on the loan tenure that you require. Okay, and we will actually take in your existing debt commitments as well. Okay, so that will involve your car loans, okay, your personal loans, your rental loan. Okay, just to take note over here, if you are selling off your property, your existing property, right, then we will not need to include your existing monthly installment. Okay, other than that, if you're keeping your existing property with housing loan, right, then this has to be included in your total debt servicing ratio. Okay, in terms of credit cards, right, okay, we will also recognize your credit card usages as part of your commitment. Okay, so do take note that this actually affects your total debt servicing ratio. Okay, and we also include revolving credits like your overdrafts. And if you are a guarantor for a motor vehicle loan, a guarantor for a corporate loan, okay, or the monthly installment will be taken in as a commitment when we are computing the total debt servicing ratio. Okay, and we will then take the denominator basing on whatever is your income, whether it's fixed, variable, or you have a combi of both. Rental income, if there's any. Do take note that for rental income, right, we will not take if the rental income is on the property that you're intending to sell. Okay, so it has to be a separate collateral whereby you have no intention to sell the property. Okay, we can take in your rental income if it's eligible. Okay, and there's this concept called eligible financial assets. Okay, these are for customers that may not be working now. They may be retired, right? Okay, but of course, for all groups of customers who wants to take a bank loan, okay, we will have to assess the total debt servicing ratio, the TDSR, and ensure that it's under 55%. So for the retiree groups of customers or customers who are unemployed, right, what they do is that there is eligible financial assets that can be used to compute an income stream determined by MAS. So if you qualify for such, right, we can use this as a part of the income sources to qualify for the TDSR ratio. Okay, so maybe I can just list a few. Commonly known ones will actually be fixed deposits, unit trust, stocks, yeah, or even bonds. Okay, so these are actually some of the eligible financial assets that MAS approved for income streaming. Okay, so this is actually the summarized formula of how we compute the total debt servicing ratio. Okay, just one important thing to take note is that for EC and HDB purchasers, right? Okay, then there are two sets of rules governing the maximum loan eligibility that you are eligible to apply for. Okay, so first thing first is that for EC, direct from developer purchases, okay, not including resale. Resale EC is not included. Okay, only for new ECs that are from developers, purchased from the developers directly. Okay, we will need to compute this mortgage servicing ratio first, okay, before determining whether the second set of calculation, which is the total debt servicing ratio, passes. Okay, so the first level cut will be on mortgage service ratio, which is capped at 30%. Okay, it's very largely similar to the total debt servicing ratio, except that for mortgage service ratio, it does not include your credit card, your personal loan, your car loan debts. Okay, for mortgage service ratio, basically only takes in the monthly installment of the new loan you're applying for, divide by your gross monthly income determined by the bank. And the calculation has to be under 30%. Okay, so far so good. Okay, then I will go on to the next section. Okay, I think this would be of interest to a lot of our participants over here today. Okay, so what are the interest rate packages that are available in the market right now? Okay, for that, basically there are three main type of packages that are offered by most of the banking industry. Okay, so let me just share a little bit more. Okay, basically there are two floating packages and one fixed type of packages in the market currently. Okay, so the first type will actually be on a bank managed rate. Okay, so this is actually a floating package. Okay, however, this is actually determined by the financer itself. Okay, so the respective bank will actually publish their own bank managed rate. Okay, however, do take note that bank managed rates, right, are usually non-transparent. Okay, so it's just how the bank feels about the market, and then they will price the package accordingly in tandem with the market. Okay, but it is non-transparent. Okay, usually it will include option to switch packages if the bank managed rates were to increase. Okay, and if there's any increase, usually they'll be giving about 30 days notice for the consumer to react. Okay, and there will be usually be a flexibility, right, for the consumer to actually prepay up to 50% of the loan amount applied initially, okay, within the lock-in period. Okay, maybe I'll just share a little bit more on what a lock-in period is. Okay, so if you're taking up a 30-year mortgage, for example, it doesn't mean that you're locked in with the bank for the next 30 years. Okay, usually depending on the package that you sign up for, it can be on a no lock-in basis all the way up to a 5-year lock-in basis. Okay, so what the flexibility of being able to do an early repayment, right, basically talks about the lock-in period. So if you're locked in with the bank for 3 years, you sign up a 3 years package, for example. Okay, and if you were to take a 1 million loan, okay, so if you go for floating packages, right, usually they offer this flexibility of able to pay up to 50%. So in this case, if you're taking a 1 million loan, right, if you're looking to pay up partially within the lock-in period, okay, you can pay up to 50%, which is about 500,000. Okay, that applies usually for the market peg rate as well. Okay, the current market peg rate that most of the banks are using as an index will be the 1 month and 3 month SORA. Okay, the 1 month and 3 month SORA, right, is actually a transparent overnight rate. It's actually published and maintained by MAS. Okay, so what the banks does is that they will base on this index, right, and allocate a fixed spread over it. Okay, so for example, if the SORA is actually priced at 0.52 right now, okay, and the bank spread is, let's say, 0.9%, okay, your overall effective rate will actually be 0.52 plus 0.9. That will be 1.42%. Okay, so how it works is that the rates and installment will be fixed for 1 month, okay, and when the review period arrives, we will actually determine what is the market index again. So for example, 1 month away from today, okay, the SORA actually decreases to 0.4. Okay, the spreads don't change. Whatever the spreads will determine, it appears on your contract itself, we will follow this. So assuming if the spread was at 0.9, if SORA drops to 0.4, your overall rate for the new month will actually be 0.4 plus 0.9, that will be 1.3%. So now that's how market peg rate works. Okay, otherwise, there is a fixed option for mortgages. So there are consumers that they do not like this volatility of floating packages, right? So right away, they will actually commit to a fixed rate. Okay, fixed rate spanning from 1 year to 5 years. Okay, so what it means is to say that whatever happens to the market, whether 3 month or 1 month SORA increases or decreases, right, it does not affect a fixed rate package. Okay, however, for fixed rate package, right, usually it's priced above the floating packages, whether it's a bank managed rate or a market peg rate, right? Fixed rate is usually priced higher. Okay, so what are the documents that you require for to actually apply for a housing loan, right? Okay, of course, these will be the basic documents, things like your NRIC, the application forms, the option to purchase, okay, and income documents as determined by the bank, but these are usually the generic ones that we will be requiring. Okay, and you will be expected to produce evidences of your credit card balances. If this information is not shown in the credit bureau, okay, you will be expected to actually give your statements to the bank to assess your debt ratio. Okay, and you also need to produce proof of existing sale of your existing property if applicable. Okay, and if you're using rental income or other financial instruments to actually to be evidenced via bank statements to qualify for the income stream that I mentioned earlier. Okay. All right. Okay, so I have reached the end of my presentation.
Good morning, ladies and gentlemen. My name is Yvonne from the Council of Estate Agencies, CEA. When you are searching for a new home, you may engage a property agent or encounter one representing the prospective buyer or seller. For this segment of Buying Your New Home seminar, I'll be sharing what are the things to look out for if you engage a property agent or encounter one. During your time with me, you will learn what are the responsibilities of a property agent, your role as a consumer, and how to manage a dispute if it happens. The Estate Agents Act applies to all estate agency work for Singapore and foreign properties marketed, sold, or leased in Singapore. To familiarize everyone, we address property agencies as estate agents and property agents as salespersons in the Act. But to make it easy for all today, they will just be property agencies, that's the companies, and property agents, and they are the middlemen you work with for your transaction. What are the responsibilities of a property agent if you engage one? A property agent could advise you on your eligibility to buy or sell, but before they advertise your property, they should also seek your prior consent. Thereafter, arrange for property viewings, and if they receive any expressions of interest or offers, they should also promptly forward them to you. Your property agent should represent you in negotiations with interested prospective parties for positive outcomes, provide help and professional advice to you throughout the transaction, and assist you to enter into a binding agreement. Your property agent should also explain to you all relevant forms and documents and help you to fill in and submit forms and documents or even information that are needed to process your transaction, including a customer's particulars form, which your agent will provide. It is compulsory to fill in the customer's particulars form, as it is one of the measures property agents must take to prevent money laundering and counter-terrorism financing in Singapore. So please cooperate with your property agent when you ask to sign the customer's particulars form. When it comes to the HDB resale portal, your property agent can guide you through the process of registering your intent to buy or sell. Please remember this. Do not give your SingPass password or any access credentials to the property agent. Your property agent could also assist you to submit the resale application through the e-resale e-service or estate agent toolkit and check whether renovations were authorized. Your property agent should also declare any conflicts of interest and all external sources of income or referral fees. For example, if he's related to his client or not, or would he be receiving any referral fee for, say, a legal service that he's referring you to? Property agents should not do these three things: dual representation, refer you to money lenders, and handling certain transaction monies related to the transaction. A property agent cannot represent both seller and buyer and collect commission from both parties in the same transaction. The property agent can help the other party with paperwork if his client has given consent, and it is clear to all that he is not working for the other party. The property agent also cannot introduce, refer, or recommend you to any money lender. The property agent is not supposed to divulge your personal data to unauthorized parties. Property agents can only handle valuation fees and their commission for or on behalf of any party in the sale or purchase of any property situated in Singapore. Handling other transaction monies for sale or purchase transactions, such as option fee, is an offense for property agents under the Estate Agent Act. Please do not get your agent into trouble. Remember to always make payments to the payee directly, not via your property agent. Use trackable payment methods such as bank transfers, crossed checks, or cashier's orders, and avoid using cash payments. So as a consumer, what is your role? You should ensure that the property agent you engaged or are working with is registered with CEA by checking the public register of estate agents and salespersons. The website address is on the screen, and you can also scan the QR code to view the public register. Recently, there have been cases of property agent impersonation scams where they ask for fees in order to facilitate a property viewing. Please note that you do not need to pay any fees to view a property. To safeguard yourself, we recommend you to use the property agent's mobile or contact number to search the public register. This is because scammers will be using a different number, and if your search does not give you any result, it is likely that the person that you are in contact with is a scammer. At CEA's website, these are the places where you can find the public register. You can search for the property agent by his name, registration number, or mobile phone number. From the property agent's details, you can check his recent transaction records for different types of property transactions in the last 24 months. You'll be able to view the towns and whether the property agent represented the seller or the buyer. The public register provides transparency to consumers like you and help you to get a sense of whether the property agent's experience suits your needs. Property agents must display their estate agent card when they are conducting estate agency work. You can verify the information on the estate agent card against CEA's public register before engaging the property agent. Commission is negotiable, and you should discuss with your property agent and agree on the commission before engaging the property agent's services. You are also encouraged to compare fees and services offered by different property agents before deciding who you would like to engage. To help you make an informed decision, property agents should provide a breakdown of their fees and services in relation to the level of services and options they will be providing. It's similar to what you will request from a renovation contractor. CEA does not fix commission rate. There is also no standard percentage for commission as it is subjected to the level of services and options the property agent is providing. So do ask around, negotiate, and agree on a commission amount before the property agent starts work. Also check if there's GST on the commission, as some property agencies are GST registered. After the transaction is completed, honor the deal and pay the agreed commission. When you're paying the commission, make sure that you are paying to the property agency, not to the property agent. We recommend you to sign the prescribed estate agency agreements with your property agent before he starts work. This is to avoid any uncertainties that could turn into disputes. You could either choose an exclusive or non-exclusive agreement based on your needs and preferences. Remember to negotiate and agree on the terms of service and commission payable and document the details in the agreement. Before you sign the agreement, read it thoroughly and ask for a copy of the signed agreement. If you sign an exclusive agreement with a property agent, you are represented solely by the property agent you sign this agreement with. The agreement is valid for 3 months, and if you would like the same property agent to represent you after the agreement has expired, you can sign a new exclusive agreement with the same property agent. If you would like to switch to another property agent, you are free to do so. Do note that you must pay commission to your exclusive property agent under these circumstances. If you close the transaction on your own during the 3-month period, and if you close the transaction with the party that your exclusive agent had introduced to you within 3 months after the validity period of the agreement. If you would like more than one property agent to represent you, you can enter into a non-exclusive agreement with the property agents you would like to work with. When working with multiple property agents, do inform all property agents in advance so that the efforts do not overlap. You may have less control over advertisements as the property agents may not coordinate their marketing efforts. You may also not have the complete picture of all the offers at any one time, as the property agents might update you at different timings. You may also ask your agent about the condition of or the history of the property. For matters beyond property agents' expertise, such as property valuation and personal financial management matters, please seek professional advice. Cooperate with your property agent by completing and signing the customer's particulars form. Provide accurate information for eligibility checks and financial planning to prevent any delays to the transaction. While property agents are supposed to do their due diligence checks for their clients, as their client, please cooperate with them and provide the latest and most accurate information to enable a smooth transaction process. And also please understand the documents before you sign them. If a dispute happens between you and your property agent on a commission payable or services rendered, do discuss with your property agent first, followed by the property agency. If you are still unable to resolve the dispute, you can seek to resolve it through mediation, followed by arbitration via CEA's dispute resolution scheme. You may approach the following mediation and arbitration centers. Under the Estate Agents Act, CEA is not empowered to resolve monetary and contractual disputes, buyer and seller disputes, and issues arising from the management of property. Please seek legal advice for such matters. CEA looks into complaints against property agents and agencies for misconduct, misrepresentation, and so on, and also entities or individuals suspected of conducting unlicensed estate agency work. You can fill in the complaint form that is available on CEA's website. The property agency and CEA will carry out investigations and initiate appropriate disciplinary action if the complaint is substantiated. Please bear in mind that it is an offense to give false or misleading statements and documents. We've now come to the end. To give you a quick summary, understand the transaction process before embarking on a property transaction. Check the public register, engage only licensed property agencies and registered property agents. Beware of scams. No fees are needed to view a property. Negotiate your agent's commission. Use CEA's prescribed estate agency agreements and document the agreed commission rate and terms of services before he starts. Honor the deal. Pay the agreed commission, not to the property agent, but to his agency for the professional service rendered. Do not hand over any monies related to transactions, especially cash, to your property agent. If you'd like more information on engaging a property agent, our website has more consumer resources available which you can view or download. You can also contact us via our feedback form if you have any inquiries. Thank you, and I'll hand the session back to our colleagues at CPF.